Okay, welcome back, student. Now we're going to do subsidiary journals on its own now. So I'm going to explain the whole subsidiary journals before we start recording the processes. So we have our CRJ, which is cash receipt journal, our CPJ, which is cash payment journal, our DJ, which is status journal, also the DAJ, debtors allowances journal, CJ, creditors journal, and then CAJ, creditors allowances journal. So on the subsidiary journals, CRJ, you record all the receipts to the business, all the business, whatever it received. So our CPJ, everything that the business pay, it's either bought, purchase, paid, as long as it's by check, then we record under CPJ. Whatever the business is selling on credit, it's status journal. Whatever the business is receiving through returns made by the customers is DAG, meaning that all return to the businesses is DAG. Whatever business is buying on credit, it's CJ. If the business returns, it's CAJ. So in this case, we are answering question number 2. In this part, they are saying you are the assistant bookkeeper of Sibuku Traders. The company uses a markup at 20% on all its sales, meaning that all the sales are on selling price, 20% on selling price, and then the 14% VAT is applicable, or where applicable. They are using 14%, but we all know now it's 15. So let's go with the 14 in this case of this question. But remember, we use 15%. When they say included where applicable, some transaction VAT is not included. Some transaction VAT is included. For example, salaries and wages. We don't charge VAT on salaries and wages because those people are subject to income tax. If ever you bought something on credit, when you start to pay, you don't account for VAT because the time you bought on credit, you accounted for VAT. So when you pay, you don't account again for VAT. So under this transaction, we're not going to answer them all. We're going to pick some, because some transactions is just a copy and paste. For example, check this transaction, cash sales, transaction number 14. If we go down, after that case sales, there must be something to do with sales as well. Okay, it's not down, I picked the wrong question. Transaction number 5, cash sales. Transaction number 14, cash sales. So something that is related. We bought equipment by check. If you go down there, you will see something related. Purchase stationery is the same as paid stationery. It's the same as paid inventory by check. Paid cleaning materials or services. So some transaction will be skipping them, and then we'll be recording some. So let's get started. They say record the following transactions to the relevant subsidiary journal for the month January 2010. Can I check if ever we are within with the recording process? Okay, we're still fine. Transaction number 1, initial capital from the owner. The owner is depositing into the business, so the business is receiving money. The business is receiving 432,000. So this is going to be recorded under cash receipts journal. Transaction number 1, the document number is RO1. They gave you capital. If ever you don't have a name on the transaction, you use the account capital. Total, it's either total or your bank, so you're going to record the total. If you can check, there's no VAT here. The amount straight to amount and then capital, because when the owner is depositing, you can't charge yourself VAT while you're depositing to the business, because you want to start a business automatically. You have to deposit in order to start a business. So that's why they're saying VAT is included, and then they indicated where applicable. So in this transaction, VAT is not included because it's not applicable. Okay, I want to explain one thing. The columns that you see in here, if you don't have a certain column and you want to record its amount, you go to sundry ledger or sundry account. Sundry ledger or sundry account. You record the amount, and then you specify the account that you don't have here. That's what sundry account it's meant for. You record all the transactions that you don't have their accounts in here. Hopefully you understand. Then let's pick transaction number. Okay, let me enter CPJ. We paid inventory by check from the best suppliers, so we must go to transaction to CPJ, subsidiary journal. CO1 is the document number you given. Date number 2, your details, you are given the name. Now it's best suppliers, so they gave you an amount that you pay. Must be on your total or your bank. Total or bank, it's fine. You didn't make a mistake. Total or bank. So whatever you paid, it's total, because your bank account is going to decrease by 89,679. But you must separate VAT and inventory. Since you didn't pay inventory for this amount, you've been charged VAT. How do you remember the last class? What are we doing? Each and every time we're calculating VAT on a certain amount. So when you divide by 1,14, you get an original amount without VAT. When you multiply by 14 divide by 114, you get your VAT amount. So it's either you divide this amount by 1,14. 1,14 comes from 114 divided by 100. So if you divide by 1,14, automatically you get your amount without VAT. And then your bank amount or your total amount minus your amount without VAT. It's your VAT amount if you don't want to calculate it using the percentage. Or you calculate 14% of this amount. Remember to divide by 1,14. Don't divide by 100, because if you divide by 100, you're trying to say this amount doesn't have VAT. So this amount has VAT inside. So don't mix the two. Transaction number 3. You bought equipment by check. You paid. You must go to CPJ. Do the same thing. Separate VAT and equipment amount from your bank amount, which is 14,000. Work with this 14,000 and separate the two. Cash sales. Cash sales. You go to your cash receipt journal. Transaction number 5. Here it is. Transaction number 5 on your CRG. You don't have a name. You put sales. You put your sales figure. I think this something is missing from the sales figure. How much is the first figure? 34,688. 34,688. So your 34,688. You must calculate sales amount and VAT amount using this amount. It must be more than this. They made a mistake since they calculated from 688. So you fix the error, because I will send you the question paper and the meme. So they calculated from this amount, they got 428, and then they calculated VAT amount. Same calculations. This divided by 1,14 is this amount. This multiplied by 14 over 114 is this amount. So always you calculate your cost of sales using your sales amount. How do you do these things? We spoke about it last time. They say for 20% on selling price, meaning your selling price is 100%. Your cost price is 20% less than the selling price. So meaning it's 100 minus 20, which is 80%. So if you can calculate 80% of this amount, it will definitely give you 34.2. That's how you do it. So since you're having all these columns here, you have to record it here. If you didn't have cost of sales, we're coming right here and put the cost of sales figure and put the details. So transaction number, some will be skipping them. This one we won't skip, because I want to show you how to record all the subsidiary journal. You bought inventory on credit from midway dealers or midway dealers. Yeah. So since you bought on credit, you didn't pay. So if you didn't pay, you must go straight to your creditors journal, because you bought on credit. How do you record it? Date number 7, PI01, midway. You put all the amount that you bought things for. It's either your totals or your creditors journal, or your creditors journal. Creditors control, I mean to say. Your creditors control. Creditors control. Or your total. So you must separate the inventory that you bought and the VAT amount. Same calculations. If you divide by 1,14, you get your inventory amount. The difference between this one and your inventory amount, it's your VAT. Or you calculate 14% of this amount, dividing by 1,14, you will get the same VAT amount. So each and every time the same method you're calculating will always be the same, because all transactions include VAT unless it's applicable. Now here you sold goods on credit, you didn't sell it for cash, you didn't receive money, so you must go straight to your debtors control. How do you account for this one? You go to your debtors control, it's date number 10. You sold goods for 15,000. You must separate VAT and sales, because total is made up of VAT and sales each and every time. It's either your totals or your debtors control. How do you? Same calculations. You divide this amount by 1,14, you will get your sales amount. You multiply by 14, you divide by 114, you will get your VAT amount. Or 15,000 minus the 13, you will get your VAT amount. Each and every time, cost of sales, I always tell you, it calculated from your selling price. From your selling price, not from your total or your VAT. From your selling price, 80% of this amount is your 10,526. 80% comes from where? From the markup question. Since they told us that it's 20% on selling price, always we're going to use 80% when calculating cost of sales. You paid for stationery, you go into your CPJ, you record the same thing. You separate the stationery amount and VAT. Total, put it on the bank account. If you don't have column for stationery, you go straight to sundry ledger or sundry expenses. Your stationery, this is your stationery, this is your stationery. Stationery amount, you separate VAT and stationery amount using the same calculations. Then you record under details, since we don't have column for stationery on top here. So like recording a simple, if ever you can analyze to determine VAT and cost of sales if you have to. Ali, the person who bought on credit, is returning goods now for 1,760. So you go to your debtors allowances journal, transaction number 12. You go straight to your debtors allowances journal and apply the same calculations. This is Ali returned 1,760. You separate VAT and your sales from this amount, because combination of these two result on your total or debtors control. Then cost of sales, you calculate from your selling price. 80% of this amount, it will give you the 1,287 each and every time. Cash sales, we did cash sales. Paid for cleaning materials, going to save as maintenance under details. Don't write cleaning materials, just write maintenance. But then you're going to separate your cleaning materials and your VAT, and the total you put it on bank. Rent received, this is going straight to your CRG. Let's check rent, transaction number 16. On your CRG, transaction number 16, you're going to separate the rent amount. I'm not sure if this is the correct amount. Let me check the correct amount for rent. It's 3.4. So it's 3.4. So 3.4 will be calculated from here. You'll get your VAT amount and you'll get your rent amount. And then if you plus the two, must be a result of 3.4. So some amount are wrong calculated. For this one, is calculated on 400. So you must check the correct amounts from here. I didn't get to fix the amount. Check the correct amount from here and then use them to calculate using the logic. The logic is fine, just wrong amounts sometimes, not everywhere, but be familiar with the amounts. And then transaction number, where are we? Number 22. Return damaged goods to Midway dealers. We're returning damaged goods. Midway, we bought them somewhere here. Midway dealers, we bought them here. Now we're returning them from here. So going to creditors allowances journal, where we are allowed to return whatever we bought on credit. Creditors allowances journal. You separate VAT and inventory from this amount. Your VAT here, your inventory here. From this amount, same calculations, nothing changes. And then going underneath, it's where you can have paid salaries of staff. Let's confirm if VAT was calculated, because I always tell you salaries you don't account for VAT, because these people are subject to income tax. 28,600. Let's go straight to cash payment journal. It's where we made all the payments. Cash payment journal. Your salaries is here, 28,600. There's no VAT on salaries. Straight 28,600 salaries, because these people are subject to income tax. Going downwards, sold goods on credit. We came across these transactions, same calculations. Sold goods on credit, different customers, same recordings. Bought inventory on credit. We bought something on credit, same calculations. We bought inventory on credit to Midway. Still we are buying inventory on credit from bands, same recordings. Bought furniture on credit, same recordings. Difference is that your item now it's furniture, it's no longer inventory. Lindu settled their account. This person settled the account in full. There must be on cash receipt journal. Transaction number 28 must be recorded on cash receipt journal. 4150, 4150. You don't calculate that, because this person you calculated the time he was buying on credit. Now the person is paying. Already VAT is accounted for. Paid Giza amount, Giza on account 4,000. You're going to pay Giza 4,000. Don't calculate VAT, because you calculated VAT the time you were buying something on Giza on credit. Now you're paying Giza. So you go to your cash payment journal, you look for transaction number 29, you pay Giza. It's your 4,000 under your creditors control. Write your 4,000. You don't account for VAT, because we did account for VAT the time we're buying on credit. Made part payment on account of Midway. We are paying Midway because we bought something from Midway on credit somewhere here. So we won't calculate that, because we did calculate that here. Now we are paying a part. I'm sorry about my background noise. Now we're paying a part payment, not full. So one account for VAT. Here it is. It's our creditor Midway. We're paying part payment. So this is how you do it. So you must be able to analyze all the transactions. I will send you the question paper and the memo, and then you get to see how did they do it, and then try to watch the video 2 times, and then you understand. And then you start to ask yourself questions, and then quote whatever you want to quote, whatever you want to ask. If ever we're going to have a meeting on Zoom, you're going to raise the question based on the video that you watch. Something that it will be like a free class. You're just going to enter there and then wait for questions. If you don't have questions, we don't have a class there, because questions will be based on whatever I've explained in this activity and the last activity. Or then if ever you will be afraid to ask whatever we're meeting, even on group, you can send voice note, or individually, still fine. I'll answer for them. For example, you can ask, okay, transaction number 5, you said it's cash sales. What happened to this thing? What happened to this thing? I will explain. So I think you will all watch the video, and then we take it from there. So I thank